We're finally seeing lots of stories about the slowdown in China, thanks to the president's tariffs. For years, most of the media bought into the idea that the Chinese economy was invulnerable. Now they're starting to question that one, aren't they? There's just one teensy-weensy problem. The Chinese consumer economy, not the export-driven one, but the consumer herself, might be in better shape than she seems. While you can't really rely on the official numbers from the Chinese government, this is an authoritarian one-party state, you can rely on the numbers reported by American companies that do business in China, and so far they're surprisingly strong. No slowdown detected, aside from the obvious exceptions. For example, Caterpillar was hurt by weak Chinese orders. That's partially their own fault. Way back in 2011, Cat bought a mining equipment company called Bucyrus International. Back then, China was committed to building a lot of coal plants, so those machines were in high demand. Now their air quality is so bad, they're trying to cut back on coal and trying to go green. Bucyrus has been a big disappointment. So Cat's having a rough time. 5 to 10% of the business. However, the other major industrials with a lot of Chinese exposure, Boeing, doesn't seem to have been hurt yet. The 737 MAX issue is a serious problem. But given the shortage of new planes around the world, Boeing will bounce back. There's just too much demand for new aircraft. The big takeaway, though, of this earnings season is that while Chinese exports have gotten hit, Chinese consumer sales are doing quite well, much better than expected. When you look at the large capitalization companies that are embedded in China, for the most part, they reported spectacular sales. We get results from Nike in a few weeks, but back in June, CEO Mark Parker called out the strong sales in the People's Republic. It was arguably its best growing market. Estee Lauder just told us it delivered excellent growth in China and added that they've seen no slowdown. And while their Canadian companies, Canada Goose and Lululemon, both reported amazing sales growth in the PRC. Canada Goose, they cited China as a dominant market. Lulu's rushing to expand their Chinese footprint to meet demand. Its call at the end of last week actually shocked me with the robust spending power of the Chinese consumer. Apple gets a sizable chunk of the sales from China, yet they still reported robust figures for all of their businesses, despite fears of a boycott that simply hasn't happened yet. Probably hear about that again tomorrow when they unleash their new designs. Starbucks just keeps opening new stores in China. And again, they called it out as one of their best growth markets, if not the best. So if you were hoping for an easy win in the trade war, I think that may be a lot less likely, even though that's the current zeitgeist. For years, the Chinese have been trying to shift away from an export-oriented economy and towards a more consumption-oriented economy. Clearly, they're further along in that trajectory than we thought. I still believe and maintain that the United States is in much better position than China when it comes to the trade war negotiations, but the consumer economy remains in great shape. So don't look to China for disappointment, at least not yet. For the most part, the American companies that do business over there are making a killing. It's one of the best markets for our exporters, confounding the merchants of both doom and gloom. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.